Hello everyone, I hope you're doing well. We are still in Unit 10, the post-war era, and we'll go ahead and get started. Today we are covering the New Deal, 1933 to 1945. This is kind of a big topic, so we'll see how far we get today, and this may be a two-part set of PowerPoint notes. So remember that Franklin Delano Roosevelt was elected in 1932 on the basis of his New Deal. It was unspecific. He didn't really lay out a plan right then for how he was going to bring the United States out of the Great Depression, but he was willing to take risks, and he made it clear that he would do whatever he could in order to alleviate the stress of the Great Depression. And on that basis, he was elected over the incumbent president, Hoover. And so there were three goals, the three R's that go with the New Deal. The first one is relief. The first thing he wanted to do was to bring the people relief. There was lots of stress. Many people had lost their jobs. Banks went under. Inflation was terrible, so people's life savings was becoming worthless. And so the first thing he wanted to do to alleviate all that was to bring relief. The second thing was that he wanted the economy to recover. He wanted to make banks stable again. He wanted to help farmers stop overproducing so that food prices could go up. And so the second thing he wanted was to see the economy recover. And then lastly, reform. And reform is basically he wanted to pass legislation that would make it so that this type of depression would never happen again. And so relief, recovery, and then reform to make sure that this type of depression wasn't followed by another type of depression. All right, so the 100 days. So this is the first 100 days of FDR's tenure as president. And so he actually did a whole lot of stuff in his first 100 days as president. In fact, by the date of his inauguration, the banking system had disintegrated, and even conservatives who did not believe in extended and a bigger federal government, they didn't believe that the president should expand powers, even conservatives saw the necessity for government intervention, and he wasted no time with government intervention. So just a look at his first 100 days. One of the first things he did was that he declared a bank holiday, which shut the banks down. The point of that was so that a federal board could go in, look at the banks, make sure that they were stable before they reopened. And so another thing he did to do with the banks was the FDIC. This stands for Federal Deposit Insurance Corporation. And basically what this did was that it was an insurance for bank accounts. And so during this time, if you had $5,000 in your bank account and the bank went under, then the FDIC would give you your $5,000 back, basically. We actually still have this today, although now it's much higher. It's like 100,000 or 150,000. If you go inside of a bank, then a lot of times you'll see the FDIC plaque. And what this means is that if your bank goes under, then the federal government will give you your money back that you've lost. All right. Franklin Delano Roosevelt also extended the Federal Reserve Board. This was like a central banking system of the United States. So this is a government organization. It had been enacted in December of 1913 in response to some lesser financial panics, but he expanded it for the Great Depression because he believed that there was a need for the federal government to control the monetary system. If further crises were to be avoided, then he felt like they needed to step up the Federal Reserve Board to make sure that banks were stable. He also established the HOLC, which is Homeowners Loan Corps, and the purpose of that was so that home mortgages could be refinanced if they were in default, like if a person had not paid back or was unable to pay their mortgage, it would be refinanced so that they wouldn't have to foreclose on the home. And so this prevented people from losing their homes because they were unable to pay their mortgage or their house payment. All right, he also took the nation off of the gold standard, and he hoped that by doing that, it would cause prices nationally to rise. And so the way he actually did this was that he had the Treasury, the US Treasury, buy gold from citizens. And so this was good for the citizens too. If they had gold laying around, then they could sell it to the federal government for money. And from that point on, only transactions in paper money were accepted. All right, so the Economy Act, Franklin Roosevelt wanted to show that this too was something that was impacting federal employees. And so the Economy Act actually reduced the salaries of federal employees, and it cut veterans' benefits, which that's a negative thing, but he felt like it was necessary because of this financial crisis that was going on. All right, so Franklin Roosevelt expands federal government like no one's business. You can't really judge him because no one was doing anything. Like, at least he was trying something. This stuff was really risky, and a lot of it was ruled unconstitutional later, but at least he was doing something. And so one of the things he did was he set up this New Deal agency called the National Recovery Administration. So this is the NRA. And this was designed to bring industries together so that they could create a set of fair business practices. And it would be fair to the managers, fair to the business, but also fair to the workers. So this was the purpose of this. Basically what happened was working hours were reduced so that more people could be hired. So basically they hired more people but gave everyone less hours. They established a minimum wage, and then workers were given the right to organize, meaning they could have labor unions. A labor union or collective bargaining is where the employees can negotiate with management for better working conditions and better wages and less hours. This one was actually declared unconstitutional in 1935 in Schechter versus the US. The reason why is that the NRA gave legislative powers, that's like the ability to write laws, to the president, and it allowed Congress to control individual businesses, not just interstate commerce. And so these were reaches of power for both Congress and the president. And that is why the Supreme Court ruled the NRA unconstitutional. All right. He also set up the NIRA, or the National Industrial Recovery Act. This one was also a controversial piece of legislation. It created the PWA, or the Public Works Administration, and this gave him the authority to spend $3.3 billion. This money went to allow manufacturers to establish price and production limits. It set a minimum wage, it set a maximum number of hours, and it also guaranteed the right to unionize. So a lot of the measures of that were the same as the NRA. So before I move on, I do want to say a couple more things about the Public Works Administration. The goal of this was not just to pull the United States out of the Great Depression. This was actually intended to provide long-term recovery. And the guy who headed this agency, Harold Ickes, actually wound up spending about $4 billion instead of $3.3 billion on thousands of work projects. And so there were these government projects, like they would build buildings or they would construct highways or dams or things like that. And then basically people would be employed by the government. So it was the government who was paying people to work on these internal improvement type projects. The NIRA, or the Public Works Administration, did not bring an end to the Depression. In fact, none of these New Deal programs actually brought an end to the Depression, but it was helpful for a lot of people, and it actually ended the problem of child labor. At this point, No one was going to employ children because they could hardly even employ adults. So it did solve that problem. All right, the Agricultural Adjustment Act. So this one was passed in 1933, and it set production limits. We talked about one of the causes of the Great Depression was the fact that manufacturers and farmers were producing too much. Why were they able to do that? Because of machinery, because of the first and second industrial revolution. It allowed people to produce a lot more quickly. But the problem is that that drives the price down of these products. And so they set production limits saying, hey, in this type of factory, you can only produce X amount of bottles per day or X amount of linens per day or whatever they were producing. The government also subsidized farm commodities during this time in order to stop the production or the overproduction of food. The government actually paid for these products. And interestingly, with that, they were paying farmers to farm less. And so again, that problem of overproduction. This did benefit some farmers, but others like sharecroppers and tenant farmers did not really see the benefits of this. They were not landowners, for one. This too, like several of the other New Deal programs, was ruled unconstitutional in 1936 because it set up taxation programs that the Supreme Court ruled were illegal. Congress did have other attempts to help farmers. They passed the Soil Conservation and the Domestic Allotment Act in 1936, and this one reduced crop acreage by paying farmers to plant crops that would conserve the soil. And then the second Agricultural Adjustment Act was passed in 1938, and this one continued the conservation payments. And so basically, if farmers would obey the acreage restrictions on specific types of crops, then they would be eligible to receive payment by the government. And so this offered incentive to plant soil conserving crops. All right, we're about halfway through. We will stop there and we'll pick up tomorrow with, or I guess Monday, with the Dust Bowl. All right, you guys have a good day. Don't forget to send me a picture of your notes.